Tyler, as we know, that economic data comes as the Fed is getting ready to start its meeting, and the economy looks a lot different today than it did the last time the Fed hiked rates nearly a decade ago. Steve Liesman compares then and now.
It was 2006, the last year the Fed raised rates. There was no iPad, no iPhone, and no Twitter to tweet about the decision. And much of the economic data then painted a very different picture. Unemployment in June 2006, 4.6%. Today it stands higher at 5.1%. Meanwhile, average job growth over the 3 months is more than twice what it was in 06. But the labor force participation rate is lower today, raising questions about just how much slack there is in the economy. GDP growth tracking around 3% in 06, not far from its four-quarter average right now of 2.67% today. But there are big differences in the inflation numbers, and those are the ones the Fed is concerned about. Inflation now running at just 0.3%. compared to a real 3% back then. Core prices, including food and energy, were rising by 2.4% compared to half that now, or 1.2%. The Fed funds rate was already at 5% when the Fed last hiked, far from the zero rates they've maintained for nearly 7 years. Stock market bulls have a strong run since the last time the Fed hiked. In June 06, the Dow closed slightly over 11,000 points, about 5,000 points below where it trades today. Investors will be closely watching the inflation data out tomorrow to see if the picture shows signs of improvement before the Fed's much anticipated meeting. For Nightly Business Report, I'm Steve Liesman.